Have you ever experienced this? You enter a buy trade, your account flashes green, and you think, this is it. I've nailed it. But just a few minutes later, the market reverses, and all your profits vanish, sometimes even turning into a loss. This is the classic tragedy for most traders. They spend all their time hunting for perfect entries, but ignore the most important factor, where to exit. The truth is, your entry decides whether you're right or wrong, but your exit decides whether you make money or lose it. I'm Louise, your AI trading assistant, and today I'll show you two powerful exit tools that professional traders use to lock in profits and avoid getting caught when the market suddenly turns against them. Let's start with trade management. In trading, there are only two ways to leave the market. You either close in profit or you close in loss. Sounds simple, but in reality, it's extremely hard because of greed and fear. When a trade is in profit, you want to hold a little longer, and often the market takes it all back. When you're in a loss, you don't want to cut it, hoping it will come back, and usually the loss gets even worse. That's why trade management is over 50% of trading success, just as important as finding the entry. The first tool is the chandelier exit. This is a volatility-based indicator built on the average true range. The idea is simple. You set your stop a distance away from the highest high, for longs, or lowest low, for shorts, usually 3 times the ATR. Why ATR? Because ATR reflects the average volatility of the market. Multiply it by 3, and you get a buffer wide enough to avoid being stopped out too early, but tight enough to signal when a real trend reversal occurs. Think of the chandelier exit as your safety harness. It lets you stay in the trade longer and capture bigger moves without panicking at every little shakeout. The second tool is the Donchian channel. If you're familiar with Bollinger Bands, it looks similar, but it's even simpler. The Donchian channel just plots the highest high and lowest low over the last 20 periods. When price breaks out above the upper band, it signals a potential new uptrend. When it breaks below the lower band, it signals a potential downtrend. More importantly, it gives you clear exit rules. If you buy on a breakout above the upper band, you only exit when price closes below the lower band. If you sell on a breakout below, you exit when price closes above the upper band. This was the foundation of the famous turtle trading strategy, one of the most legendary trend-following systems in history. Now let's see these tools in action with a real example. Imagine you're trading XAUSD. Price is in a strong uptrend, and you buy on a breakout. Instead of stressing about where to take profits, you add the chandelier exit to your chart. As price climbs higher, your stop automatically trails upward. The advantage is, you can ride the trend to its fullest, without jumping off too early. And when the trend truly ends, the chandelier exit gets you out at an optimal level, locking in most of your profits. This is exactly how professional traders manage to hold trades for days, or even weeks, while keeping their emotions in check. Now let's switch to the Donchian channel. Suppose gold breaks above the upper band, signaling the start of a new uptrend. You enter a buy at the breakout. As long as price stays above the midline and well clear of the lower band, you hold your trade. Only when price closes below the lower band do you exit. This way, you capture the bulk of the move instead of cutting your profits short. The difference here is huge. Amateur traders guess where to get out, while professionals let rules and tools decide for them. Both indicators share one powerful principle. They transform exits from emotional decisions into systematic rules. No more, I think it'll go further, or I'll just hold a little longer. Instead, your exits are defined, mechanical, and repeatable. That's what separates long-term winners from the majority of traders who let emotions control their trades. To sum up, entries are important, but exits shape your final results. The chandelier exit gives you a smart trailing stop based on volatility, letting you ride trends longer without giving back too much. The Donchian channel keeps you aligned with the bigger trend, telling you exactly when it's over. Combine the two, and you'll be able to protect your profits, ride moves with confidence, and eliminate emotional guesswork. Remember, greed and fear are a trader's biggest enemies. Exit rules are your shield. Once you master the chandelier exit and the Donchian channel, you'll notice a clear difference in how you manage trades and in the profits you keep. If you found this useful, hit the like button, subscribe to Zeus Trading Cashback, and join our group in the description to access real-time trading signals and cashback rewards. Right now, we're offering free access to our premium group for 7 days, an incredible chance to test professional strategies at zero cost. Don't miss it. This could be the turning point in your trading journey. See you in the next video.